Hey everybody, Smart Silver Stacker here. This past Sunday, I released a video covering a topic that many of you are probably already familiar with at this point, and that was the announcement by the Russian central bank that they would be purchasing gold for a fixed price of 5,000 rubles per gram until June 30th. Now, I got a pretty serious reaction to that video. I had a lot of viewers leaving me comments informing me that this was not a real gold standard and that Russia was not backing up the ruble with gold. Now, mind you, I never made that claim in that video, but a lot of people seem to think that that's what I was saying. And so I wanted to make this follow-up video to kind of clarify my point on that and also talk about what a Russian gold standard actually would look like, because I think that we may see one in the future. One of the reasons I believe Russia may be buying all of this gold is because they have plans to back up the ruble with gold. But I also wanted to provide an update on the situation because there are some important new developments, in fact, some that just came out today, regarding the sale of Russian oil and gas to Europe in rubles. And so we're going to cover that as well. Also, a lot of those comments, people were claiming that the ruble was a worthless currency and it was going to go to zero. And, I don't think that's the case. And we're going to talk about why I think the ruble may actually be moving up soon. And of course, if the ruble does appreciate and move up in value relative to the US dollar, the fact that Russia is making these purchases of gold at a fixed price in rubles could be very bullish for gold moving forward. Also, right now, if you take a look at the chart of gold, there are some technical reasons why gold is looking like it is about to break out on a big bull run too. So we're going to take a look at those as well. And, things are moving very fast in the world of gold and precious metals these days. So we've got a lot to cover. Let's get to it.
Today's video is brought to you by a new channel sponsor, Silver Botanicals. Silver Botanicals' line of household and personal hygiene products utilizes the power of nano silver. I've been using several of their products and I've been particularly impressed with their Silver Shield deodorant. Personally, I was really happy to ditch my aluminum-based antiperspirant and switch it out for a product that uses my favorite metal, silver. Check them out and head over to silverbotanicals.com. There's a link down in the description. And don't forget to use coupon code STACKER to save 10% on your order. Okay, so here's that story from Kitco that I referenced in that previous video. All that was covered in this story is that the Russian central bank announced that they would be purchasing gold at a fixed price, 5,000 rubles per gram, until June 30th. This does not mean that Russia is implementing a gold standard. I just want to clarify that, because in order to implement a real gold standard, Russia would have to do the reverse. They would have to sell gold at a fixed price in rubles. Essentially, they would have to say that rubles are redeemable in gold. That would be what a real Russian gold standard would look like. That is how Russia would actually back the ruble with gold. And they have not announced that. They haven't done that. Although, I think that there may be a reason that they're buying all this gold and that they have bought all this gold over the past decade or so. And that is because we might see a Russian gold standard moving forward. So, that's not outside of the realm of possibilities, but they haven't talked about that yet. They haven't done that. A lot of the reaction to that previous video also was folks saying that the ruble would be declining and that the ruble would be worthless and that it didn't matter if the Russians were going to pay a worthless fiat currency at a fixed rate for gold. Well, I do think it matters because I don't think that the ruble is going to be depreciating moving forward. In fact, I think that the Russian ruble will be moving higher relative to the US dollar and other currencies. The reason that I say that, and of course that would be very bullish for gold because, they're paying a fixed price in a currency for gold, and if that currency appreciates, then that's going to put a floor under gold, and in dollar terms, it might actually cause the price of gold to move up. The reason that I believe the ruble will be appreciating moving forward is because of the Russian demand that foreign nations pay for oil and gas in rubles. And earlier today, we got this article from Reuters, breaking ranks with EU, Hungary says ready to pay for Russian gas in rubles. And let's see what the article says here. Hungary said on Wednesday it was prepared to pay rubles for Russian gas, breaking ranks with the European Union, which has sought a united front in opposing Moscow's demand for payment in the currency. Hungary will pay for shipments in rubles if Russia asks it to, Prime Minister Viktor Orban told a news conference on Wednesday in reply to a Reuters question. Russian President Vladimir Putin has warned Europe it risks having gas supplies cut unless it pays in rubles as he seeks retaliation over Western sanctions for Moscow's invasion of Ukraine. this is exactly the kind of story that I think we will be seeing more of moving forward. Don't forget that the EU depends on Russia for about 25% of its energy supply. So that is a massive amount of energy they are importing from Russia. And you can't just take a modern industrialized economy and cut out 25% of the energy supply. And that 25% number, that's the EU as a whole. There are other countries like Germany, which are far more dependent on Russian natural gas and oil. I think that if the Russians play hardball, and they are, obviously, I think that they really will cut off gas supplies to Europe if they need to in order to drive home this point. But, as the reality starts dawning on the leaders in the European Union, I think that we'll see more and more of them begin to capitulate. And I don't think there's going to be any kind of united front. So as the EU nations are forced to go out into the marketplace and buy rubles in order to purchase their oil and gas, one, that's going to be bearish for the dollar because previously those countries would have been buying dollars to go out and do this. And it's going to be bullish for the ruble because there's going to be increased demand for the ruble. I mean, it's that simple. Now, I'm glad to have clarified all those points. I'm sure that there will be a lot of reactions to this video too. And, again, I'm not saying that Russia's on a gold standard, but I don't think that the ruble is going to be crashing anytime soon. In fact, I think it's probably more likely that the dollar is going to be crashing than the ruble. And I'm not taking Russia's side. I'm just calling it as I see it. I'm not a huge Putin supporter or anything. I don't think that invasions of other countries that have not militarily attacked you is a good thing or it's justifiable or anything. But that doesn't mean that I'm just going to ignore reality and say that, the ruble's going to turn to dust because I don't like Putin. Now, I mentioned that there were some other reasons that I believed gold was going to be moving higher. And I want to take a look at this page here on Investopedia. And this is the page for a technical pattern called a cup and handle. And I want you to just take a look at this picture here. This is a classic cup and handle formation. See what that looks like. You get this cup formation here, you get a high, and then it kind of drops down in this curving arc. And then you get what's called a handle, which is a correction downward. And then that top line there, when the price action of an asset moves through that top line on the handle, that is a very bullish move. Now, I'm not a master technical analyst or anything here, but sometimes patterns are just not that hard to spot. And now let's go ahead and take a look at the chart for gold. Okay, so here's the chart for gold over at tradingview.com all the way back to 2006. This is a monthly chart. And you can see, it's kind of hard to miss the cup and handle formation here. So here's you got the 2011 highs, then you've got the past decade of consolidation here in this cup formation. And then back in 2020, you got this run up to about the 2076 level, downward handle. And then you can see that top part of that handle, gold has broken through that. And so now we may be just on the verge of a breakout. Now, gold did approach the previous highs, and you can see that it kind of pulled back a little bit, but that's kind of normal on a breakout to test the previous high before blowing through it. And so now, from a technical standpoint at least, it's looking extremely bullish for gold, like it's set to just have a massive rally. Now, there are some things with this technical pattern that you have to confirm in order to make sure it's valid. So let's go back to Investopedia here, and you can see they've got a few things to consider when looking at these patterns. The first one is length. Generally, cups with longer and more U-shaped bottoms provide a stronger signal. Avoid cups with sharp V bottoms. And we can go back to this chart and you can see, well, that's almost a 10-year cup formation, and it's pretty shallow and broad. So, that's about as wide of a cup as you're going to get. Now, let's go back and look at this second point here, depth. Ideally, the cup should not be overly deep. Avoid handles that are overly deep also, as handles should form in the top half of the cup pattern. So here's your handle, and clearly that is well above the midpoint of the cup. It's all definitely in the top half of the pattern, so that is confirmed as well. And then finally, volume. Volume should decrease as prices decline and remain lower than average in the base of the bull. It should then increase when the stock begins to make its move higher, back up to test the previous high. And I know this is stock, but you can apply this to any asset really. And let's go take a look the chart for GLD. Now, I had to use GLD, the paper ETF of gold, because TradingView didn't have volume data for that futures contract we were looking at previously, but GLD will do for our purposes here to take a look at the volume. And you can see that as the chart for GLD descends into this cup and the lows of the cup, volume is significantly lower. And then as it begins to break out and take a run at the previous highs here and here, volume is much higher. So that is confirmed as well. So all 3 points confirmed on this chart of gold for the cup and handle pattern. And again, if there's somebody out there who is skilled at technical analysis, because I'm not claiming to be, let me know what you think about this pattern. I would love to know in the comments down below. And then one last thing I want to take a look at here on this Investopedia article is about how you can kind of set a price target using this pattern. A profit target is determined by measuring the distance between the bottom of the cup and the pattern's breakout level and extending that distance upward from the breakout. For example, if the distance between the bottom of the cup and handle breakout level is 20 points, a profit target is placed 20 points above the pattern's handle. Okay, so let's take a look at that gold chart one more time. And we can see that the bottom of the cup is here around $1,055. And then if we go up, we can see that the top here is around $2,076. So call it $1,000 difference between the top of the handle and the bottom of the cup. Well, if you move up $1,000 from here, from the top, from $2,076, you get a price target of roughly $3,100. We'll say $3,100 would be our price target for a bullish breakout. And that is pretty interesting. And I'm going to tell you why that is such an interesting price target to get from this pattern. If we go over here to this CPI inflation calculator, and this is provided by the US Bureau of Labor Statistics, we're going to take the old high for gold from 1980, because remember, that was one of gold's biggest bull runs of all time. In January of 1980, gold hit $850. And we're going to adjust that for inflation to today's dollars. And if we calculate that, you get a number right around $3,100. So the previous high in the biggest bull run in history for gold, at least in our lifetimes, if you adjust that high for inflation, you get $3,100. So you're getting the same price target confirmed by adjusting the old high for inflation as you do by looking at that chart and using that method, the cup and handle pattern, to determine a price target. So I find that very interesting. And so I think it is a very reasonable forecast to say that gold could be headed to the $3,100 level in the relatively near future. Now, how long will that take? I don't know. I'm not telling you to go out and make financial decisions or investment decisions based on what you see in these videos. I'm not a financial advisor. Take what I say with a grain of salt. Do your own research. I do think that gold and silver are extremely undervalued at today's prices. I don't have a crystal ball, and timing markets is extremely difficult. I'm not claiming to be able to do that, but I do think that the trend for gold is going to be higher. And also, it could happen in a short period of time. It could be that a month from now, gold is trading at $3,100. That would not shock me at all. So something to look out for. Let me know what you think in the comments down below. If you'd like to see more videos about gold, silver, and what's going on in the world economy, then check out the videos that are popping up on your screen right now. Thank you all very much for watching. I will catch you next time. Smart Silver Stacker, out.